Good morning and welcome to First Mover, your first global look at today's action in Bitcoin, blockchain, and digital assets. I'm Jen Sanasi along with my co-hosts Emily Parker, CoinDesk's Executive Director of Global Content, and the TIE Director of Content, Lawrence Lewitton. Let's take a look. Without a tie, exactly. The tie director without a tie this morning. Before we chat to Emily and Lawrence, let's take a look at what's going on in the markets. The CoinDesk Bitcoin price XBX index is currently at 26,017. Not a whole lot of movement between the CPI data yesterday and the upcoming Fed meeting. We'll have to see what happens to the price after we get that information this afternoon. Let's see what's going on with either the CoinDesk Ether price ETX index is at 1,745, doing a little better than Bitcoin, but still not a whole lot this morning. Let's see what's happening in the DeFi markets. The DFX CoinDesk's DeFi index is at 94.23, up about 1%. Lawrence, Emily, how are you doing this morning?
I'm holding my breath.
Well,
waiting for the Fed. Waiting for the Fed to do what everyone expects it to do.
Yeah, we're always waiting for the Fed to do what everyone expects them to do. Some other big news that isn't really crypto news, but big world news that happened yesterday. Former U.S. President Donald Trump pleaded not guilty to 37 federal criminal charges that he unlawfully kept national security documents and lied to officials. If we want to take the crypto angle here, we got to talk about those Trump NFTs. Emily, what's going on with the Trump NFTs? Have we seen any movement on the news?
Do we have the latest numbers for the Trump NFTs?
Yeah.
I think,
the full price is at 0.17 ETH. Both volume and sales are up over the past 24 hours. That said, there hasn't been a lot of movement. So they are up, but there wasn't movement. So, it's all relative.
Yeah. I mean, I think what's sort of funny about this is just the takeaway that, is there anything that Trump could do that could move this Trump NFT? It just, there's just something about, sort of the support and the base here that will, support this NFT basically no matter what happens in the real world is kind of my takeaway from this. I mean, granted, obviously it's not doing that well, but it's sort of notable that, yesterday's news didn't really have that much of a dramatic impact on this.
So would you be a buyer every time he gets in trouble?
Maybe that's the business model here. I don't know.
Maybe that's it. It's like a counter trend thing,
If you look at the trend, when Trump is in the news, it seems like volume goes up and price goes down. That's what it looks like. Yeah.
It's a hedge, everyone.
There you go. We'll have to wait and see what happens the next time we talk about Trump. But Emily, you got our first guest.
Yes. So turning to a slightly different topic, we have the House Financial Services Committee held a hearing yesterday on the future of digital assets. And our first guest is one of the witnesses during that hearing, Prometheum co-CEO Aaron Kaplan. Welcome back, Aaron. Okay, so the focus of that hearing was on the stablecoin bill drafted by House Republicans. Let's first listen to part of your opening statement.
I'm particularly worried that
there is a compliant path forward for crypto in the United States that the SEC has clearly laid out. Those who argue for new laws are simply not willing to comply with existing applicable securities laws and regulations. New legislation is not in the best interest of the investing public or the blockchain industry. Legislative efforts will take years to implement while the American public will continue to operate on reckless, unlawful platforms.
Okay, Aaron. So let's get first your main takeaway from the hearing yesterday and your thoughts on the stablecoin bill for people who are not tuned in.
Thank you for having me. My main takeaways were that the draft market structure bill did not properly protect the investment public. The provisional registration for crypto firms under as commodities distributors, basically exculpates them from any previous sort of liability to any of their customers. Now, let's take FTX or Binance, for example. Under the bill, if FTX or Binance had registered as a provisional commodities firm, a digital commodities firm, essentially their customers would not have any recourse against those firms once under that provisional registration. So essentially, it basically sacrifices the needs of the public at the expense to the benefit and to the reward of the entities that essentially have not followed the law historically.
So just to be clear again, for people who are not following this in great detail, what exactly are you proposing? So you're quite critical of this bill, but what are you proposing? Are you just proposing the status quo, or are you proposing something, some specific alternative?
Part of the draft market structure bill essentially gives a lot of responsibility for oversight of crypto to the CFTC. And I would argue that the SEC and FINRA are the most capable financial regulators in the world. Combined, they have 8,000 employees. The CFTC and NFA, which is the regulator, and the SRO, combined have 1,300 employees. We saw the dangers to the public when this area is not properly regulated, when there's not proper enforcement mechanisms, when there's not proper oversight. Why not put our most capable financial regulator on this case, or basically, why not apply the most capable financial regulators in order to protect the public here?
But are you sort of arguing that the SEC should just continue doing exactly what it's doing? Because I feel like that's, a minority opinion in the crypto world, or is there something that the SEC should be doing somewhat differently? Because obviously their current approach is widely controversial in the United States.
Well, Prometheum Capital was just approved as the first special purpose broker-dealer, which basically allows it to compliantly custody digital asset securities under the federal securities laws. Before that, the SEC has laid out compliant frameworks for the trading and custody of digital asset securities. Maybe before Prometheum Capital was approved, people could argue that there were frameworks, but there was not necessarily a path forward because essentially no one was approved under those frameworks. Now that argument is moot. There is regulatory clarity. There is a path forward for crypto in the United States. And basically the way forward is to follow the example that Prometheum Capital and Prometheum ATS have laid out.
So I have to ask, you say, like, look, if the CFTC were in charge of FTX, the customers would have no recourse. But this situation with FTX was that basically they were committing outright fraud and all sorts of issues with commingling funds, things like that. Last I checked, that's just not legal anywhere, regardless if it's the SEC or CFTC or, a real estate brokerage. I as a former real estate broker, as a currently licensed real estate broker, I'll tell you, you commingle funds, you're in a lot of trouble. And that has nothing to do with securities. So the issues regarding that kind of stuff, and also the charges that were brought against Binance, were very severe. And that also had to do with commingling funds. So I don't understand this argument. And if you could perhaps clarify, wouldn't customers still have some recourse involved with FTX, given what they did was fraud, if it had occurred in the United States anyway?
No, essentially, under the draft market structure bill, when someone provisionally registers with the CFTC, basically they're no longer liable for any of their previous actions when they were not registered. Essentially, it sort of presents a force field that prevents any customers from taking recourse against them who were harmed, and prevents any regulator for taking action against them off their previous violative conduct. That doesn't seem to make any sense. Essentially, rewards entities that have basically violated the law, and it harms their customers who were harmed by those malicious activities.
But that, from my understanding, and you could correct me if I'm wrong, that would involve situations where they did things that were in violation of, let's say, securities regulations. But this is fraud.
But who cares about securities regulations? You violated the law.
Right.
You basically did not follow the law, and essentially you harmed your customers, and as a result, those customers should have recourse against you. Just because you provisionally register with the CFTC doesn't mean that your prior actions that were malicious and harmful to your customers, that you shouldn't be held culpable for them.
So then what's to keep let's say the mafia, which doesn't exist if you're watching this and you're in that, it doesn't exist. But what's to keep people from the mafia, let's say, from registering with the CFTC and saying, well, we did loan sharking and things like that, but we're registered with the CFTC now. I mean, that also doesn't make sense. They're still liable. I mean, there's tons of people in prison in New Jersey over this, for all sorts of fraud and things like that. I mean, wouldn't they have gotten off if they just registered with the CFTC, according to your argument?
You're conflating two issues. One is when you're issuing financial products to the public that are investing in that product. They're speculating in that product basically with the intention of generating a profit in a common enterprise primarily from the efforts of others. Essentially, those are financial-based activities. Those are financial-based violations if you are not compliant with the law there. And what we need is the most stringent framework in order to protect the investing public. What we saw with FTX, when there's not proper oversight, when there's not proper regulatory frameworks, essentially the investing public is going to be harmed. The best way forward is the application of the federal securities laws, which are tried and tested over generations and are literally meant to protect investors.
So the fact that they issued, let's say, I don't know, they commingled funds and they may have issued balance sheets that were false, things like that they basically committed fraud prior. If they had then subsequently registered with the CFTC, you're saying that all that amount of fraud, regardless of what was involved with securities aspects to it, but I'm talking about straight up fraud, straight up felony stuff, all of a sudden gets wiped away just because they registered with the CFTC.
So the bill is not 100% clear. There's still a lot of clarifications that need to occur, but any fraudulent financial related activity, there's an argument that they would not be held liable for that under the provisional registration. Now, beyond that, the question really is how do we best protect the customers? When it comes to FTX, if there had been proper oversight, if they had to do proper reporting, if there had been a mechanism to make sure that they were somehow maintaining levels of compliance, I think we could have avoided a lot of the issues. Obviously, there was outright fraud, but if there had been a mechanism to make sure that they weren't committing fraud and that someone was properly overseeing them, customers would have been protected. And that's what exists when you apply the federal securities laws. You have the SEC and FINRA, which are the most capable financial regulators in the world.
The issuers would then also have to, the issuers of these tokens, et cetera, would also have to do quarterly reports, things like that, which they, again, you're asking them to do things that just don't exist in what they're doing. And so it doesn't necessarily make sense.
You're telling me that a company could raise hundreds of millions of dollars and they have no responsibility to issue any sort of reports or disclosures? Think about it. What you're saying is...
What company issued Bitcoin?
Bitcoin is the only sufficiently decentralized entity. We can say all these nonsense tokens, but the overwhelming majority of smart contract-based network tokens were issued for raising capital with the intention of creating out a network based on the efforts of others, where that network, the price of that asset, the price of that token would increase based on the effort of those individuals to create a value in the common enterprise. There's no getting around this fact. We are fully aware that the overwhelming majority of companies raised capital by issuing a token in order to build out a network where the people who participate in that token had the idea that they would have an increase in value in that asset based on the efforts of those engineers and the developers to develop out that network.
Your industry peers have tried to do exactly what you've done. They've tried to register with regulators. They've come out and said, it's just not possible. We've tried to have conversations. We're not really getting anywhere. Don't you think there are clear regulatory frameworks that are needed for your peers in the industry so that the industry can grow and they can achieve the same thing that you did?
I believe that the peers can follow the same frameworks and the example we've laid out. Essentially, people say, whenever we go into the SEC, we get a Wells notice. They're conflating two concepts. One, you're trying to figure out how to come into compliant. Two is, what about your previous violative conduct? Just because you try to work out how to come into compliance doesn't mean that you it exercises or launders all your previous violations.
I want to talk about the Howie test. During the hearing yesterday, the Financial Services Committee GOP account tweeted that the new bill will reform the Howie test and clarify what a security or commodity is. How important do you think that is?
I think the reformation of the Howie test is an attack on the general concepts that underpin the securities laws. The securities laws are based on substance over form. They're based on the economic realities. They look at the reality of the transaction, not the fact that someone declares it's a token and not a security. And basically what the draft market structure bill does, essentially it says that once a company says that they are sufficiently decentralized and there's a declaration declaration of such, they are no longer a security. There is no precedent for a security caterpillar to transform into a non-security butterfly. It hasn't happened. There's no basis for that. And I don't understand why once something is a security, it should not be a security thereafter. The people participating in that asset are literally doing it for the same reason they did in the beginning. They anticipate an increase in the value of that asset based on the people developing out that network to attract more transactions or customers.
Aaron, thank you very much for joining us this morning. That was Prometheum co-CEO and founder Aaron Kaplan. Coming up, we'll take a look at what's going on in the markets ahead of today's Fed meeting.
Let's dive into the crypto markets with Bitwise Management Chief Investment Officer Matt Hougan. Welcome back, Matt. I said welcome back. I don't know. It's pretty goth of me, but welcome back. So yesterday, we had the CPI number come out, and that was slightly better than expected, if you will. It was slightly lower than expected, and today we're waiting for the Fed. Everybody is 92%. Probability of a pause, or was it aggressive or hawkish pause or something? I don't know what they're calling it, but basically just a breather, just a 1 month breather until next month, and then all of a sudden we see that the markets are expecting higher rates. So what does this mean for the macro situation, and of course what everyone watching this really cares about, crypto?
Yeah, well, let's go right into the crypto side. Thanks for having me on again. It's great to see you. The hawkish pause. My base case, honestly, is that the Fed mostly right now no longer matters to the price of Bitcoin one way or the other. It mattered a lot when we were cutting rates to zero. It mattered a lot when we were living through the most aggressive rate hiking regime in history. But now we're fiddling with 25 basis points. We're playing with semantic terms like a hawkish pause. There are much bigger forces going on in crypto. We just have this vestigial memory that we should remember what the Fed does is important. Look, the next major big Fed move is to cut rates. Maybe not now, maybe not next month, but eventually they will cut rates aggressively to deal with a weakening economy. And I think that will be supportive for crypto. But for right now, It's fun to watch the Fed announcements, but I don't think it's going to move Bitcoin prices one way or the other because it's just fiddling at the edges.
It might be fiddling at the edges, but one thing that we saw is that we caught financial institutions with their shoes off. Let's just say, making it family friendly, and they basically had on their books all this long duration, duration bonds, and mortgages, basically, which messed up their balance sheet, which messed up things when they had a couple of them had runs essentially. And the Fed basically looked at this and was like, oh, okay, well, and that might have been part of why we saw this pause. But if it continues to raise rates, could there also be another situation happen where all of a sudden it kind of cuts down on risk appetite and therefore affects crypto?
Yeah, I think that's true if it sustains over time and they continue to raise rates aggressively. I just don't think that's what we're going to hear out of the Fed today. We're going to hear, concerns about lingering inflation, but a moderation of economic prospects and sort of a mixed message. But for sure, if rates went, straight up and to the right from here, that would be negative for the market and would cause concerns in the banking sector. As you suggest. I think more when we talk to investors out there, what they're hearing or thinking about as the Fed fiddles with rates is what it means for global economic prospects, what it means for an economy that's decelerating at the same time stock prices are up, and where do they find growth for the rest of their portfolio. That's what they're thinking about. But for sure, if we get a big surprise from the Fed, it will shape the markets. I just don't think we're going to get that today.
So Matt, you mentioned that interest rates are not what's moving Bitcoin. So what are these forces that would have an impact on Bitcoin's price?
Yeah, great question. My base case is that we're in a period like 2019 where crypto prices sort of muddle along with relatively low volatility and relatively positive returns over time, but it's sort of a quiet period. If you remember back to 2019, very few people wanted to enter the Bitcoin market. It ended up being a fantastic time to come into the market because 2020 and 2021 were so good. But Bitcoin didn't really have a narrative. I think that's where we are here. Bitcoin is sort of lacking a narrative. There's not that much more negative regulatory news that they could throw at us. Things that would move the market were new information about regulation or new traction on real world use cases for assets outside of Bitcoin. Things like what's going on in the Ethereum ecosystem that could boost the animal spirits in the crypto market. I think crypto is going to be driven more by fundamental factors and regulatory factors over the next 6 months than it is by interest rates or macroeconomic things.
Well, that's an interesting prediction because we've just had two massive regulatory developments, perhaps the biggest in the last few years, that haven't really had any impact on Bitcoin's price at all or any measurable impact. I mean, we could say that it did, but it kind of didn't, right? So I mean, you look at like the SEC going after the biggest exchange in the world and the biggest exchange in the United States, and Bitcoin was kind of like whatevs, it's interesting. I mean, I'd be interested to see if that was like a change. But while we're talking about those lawsuits, what's your take on them? I mean, I feel like you said something about how Binance lawsuit was good for crypto. I'm curious if you could explain that and if you feel the same way about the Coinbase lawsuit as well.
Yeah, the Binance lawsuit is good for crypto. Binance was an important part of the crypto ecosystem. They onboarded a lot of people, but it's an imperfect institution. One thing we've learned over the years is that two things work in crypto, either full decentralization or regulated centralized entities. This messy middle where things like FTX fell, where you have centralized entities that aren't regulated, raises risk for investors. And the sooner we squeeze that out of the market, the better. And I think that's what's going on at the heart of the Binance lawsuit. The Coinbase lawsuit is obviously different because they're a major positive actor in the crypto ecosystem. And I actually think it goes to something existential. And, when I listen to your last guest talk, and when I listen to people cover this, I think they're missing the point. They sort of think crypto assets can come in and register. What the SEC is saying at its core is it's impossible for a group of entrepreneurs to come together, build a network, and then decentralize it. And of course, decentralization is the core of what makes crypto interesting. Without decentralization, a blockchain is just a bad database. So if we don't have this pathway to go from a small team to decentralization, we're going to stunt the growth of crypto in America. I don't think that's what's going to happen. America does silly things, but it doesn't commit suicide. I think eventually legislators will step in and realize that we want there to be this space for decentralized networks to exist. But that's what's at stake in the Coinbase lawsuit. It's really sort of existential for the future of crypto. Otherwise, the only decentralized networks the world will ever have are Bitcoin and Ethereum. And I don't think that's the future we want.
Bitcoin hasn't moved on the news of the lawsuits, but altcoins have. And there have been a few reports that have come out that say, investors are fleeing altcoins. What's your outlook on altcoins as Lawrence mentions Doge?
Yes, altcoins, I think you did see a separation in price the week of the Coinbase lawsuit for sure. I think Bitcoin was down about 5%, and coins like Solana were down 20, 25 or more percentage points. I think that's a rational response for investors. This lawsuit is a fundamental challenge to those existing altcoin securities. Now, the bet an investor could make is that the SEC won't win out and there will be a rebirth, or that these networks can grow abroad. And certainly the animal spirits in the developer community around assets like Solana are still very strong. But I do think the regulatory headwinds hit those assets much more, obviously, than they hit Bitcoin and Ethereum. I think that's a rational response, and I suspect that will hang as a shadow over those assets for the next 3-6 months until people get comfortable with it and see how they're developing abroad and in other locations.
Matt, thanks for joining us this morning.
Thanks for having me.
That was Matt Hougan, Bitwise's Asset Management Chief Investment Officer.
The State of Crypto is presented by Tron, connecting the world to the power of cryptocurrency.
All right, the SEC's motion for a temporary restraining order to freeze Binance US's assets has been declined for now. Joining us now to discuss is CoinDesk's Global Policy and Regulation Managing Editor, Nick Day, who is also the editor of CoinDesk's State of Crypto newsletter. Good morning, Nick.
Good morning.
All right, you were in D.C. yesterday covering that hearing. What did the judge say about the agency's request?
Yeah, so this was a several-hour hearing. The judge asked a number of questions to the SEC, Binance US, and CZ's lawyers. Her main thing is she doesn't think a temporary restraining order is appropriate at this point. She's been urging the parties to negotiate some kind of stipulation or consent decree that she could sign off on instead. And that's basically where she left it yesterday. She ordered the parties to continue negotiating. She's expecting a status report by the end of the Thursday, so tomorrow, and we'll see where we're at then. But in her words, the parties are already pretty close. They've agreed on most of the issues. The one sticking point is the SEC wants to freeze Binance US's assets until it's had a chance to look at its business expenses and maybe some audited financials. Whereas Binance US says that they don't want to freeze funds for the purpose of business expenses at this time because it would, in the words of one of their lawyers, be a death penalty.
Let's talk about some of these allegations that the SEC made in the lawsuit. Did any of them come up in the hearing yesterday? We heard when the lawsuits dropped that they were being accused of commingling funds, operating as an unregistered securities broker. Any of this come up?
So they sort of came up, but only in the context of the temporary restraining order itself. Obviously the underlying case was a pretty significant one. Probably the most interesting questions asked by a judge were pertaining to the whole, securities versus commodities versus, whatever, of crypto assets. So she asked the SEC multiple times, the multiple SEC lawyers, to distinguish between a crypto asset and a crypto asset security. She asked the Binance lawyers, is BNB a security? And if not, is it a commodity? And it's one of those questions that, lawyers were not really necessarily willing to answer. The SEC team mostly said that, they didn't want to make an assessment on the crypto assets that they didn't call securities at the time. And the Binance lawyer said that BNB is a crypto asset when asked if it was a commodity. So, the judge is kind of, dipping her toes into what is fundamentally like the basic question at the heart of all of this. So at the heart of the Binance suit, the Coinbase suit, the Bitrex suit, the Biaxi suit from before. And it'll be interesting to see if she decides to either try and find a definition for all this to create some kind of precedent or guidance that companies can take a look at, or how she approaches it going forward.
Lawrence, you're back.
I'm back. Yeah. You remember that squirrel that ate up the NASDAQ's wires a few years, well, maybe it was before your time, but it shut down the NASDAQ. I think that descendants ate up the wires here. So Binance, getting back to Binance US, I mean, they kind of had this whole thing like basically prepping people to, quietly exit. That's still underway?
So in court, at least, what the Binance US and Binance attorneys were saying is, they're not going to shut down. The only way they would is if Binance US's funds are completely frozen and it's unable to pay ordinary business expenses. So, salary, rent, licensing fees, things like that. At the same time, the Binance Global and the Binance US teams both said that, at least insofar as making sure that no one from Binance Global, including founder CZ or anyone else offshore, has access to Binance US's private keys, they said that they would work on that. So not really an exit so much as just saying that they'd be willing to go to at least that extent to what the SEC has requested.
Mm-hmm.
All right, Nick, lastly, what happens from here? What do we expect next?
So the next thing we're looking for is the report at the end of the day tomorrow. We'll see if the parties have made any progress in negotiating. The judge really urged them to, find some kind of common ground and compromise that they could agree to. If we do see that compromise, then there'll probably be a bit of time for discovery and all those other processes before we get to the next hearing. If not, then we'll see what the judge decides.
Nick, thank you very much for joining us this morning. That was CoinDesk Global Policy and Regulation Managing Editor Nick Day. Don't forget to sign up for the State of Crypto newsletter on CoinDesk.com. Next up, we're going to take a look at the landscape of CBDCs in Brazil after this short break. Welcome back to First Mover. The Central Bank of Brazil has selected 14 institutions to participate in the pilot of the digital real, the country's central bank digital currency. Here now is Guilherme Jimenez, Chief Technology Officer of Brazil-based bank Inter. Welcome.
Hello. Thank you all for having me today.
Thank you for being
with us.
And I'm
excited about talking about the Brazilian Central Bank decision to go for the CDBC pilot.
Yeah, so as I mentioned in the introduction there, Inter is one of 14 participants contributing to this pilot, along with some big names like Microsoft, Visa, and others. What can you tell us about the pilot and the role that Inter is playing in it?
Okay, so first of all, just a quick introduction. I'm a CTO of Inter & Co., a financial and non-financial platform with 26 million customers in Brazil. And we were one of the selected financial institutions to participate in the CDBC together with Central Bank. I think the most important thing about this project is it will allow us to test crypto technologies in Brazil and come up with new services and products in the financial industry.
So I guess the question about the CBDC, and this is one that's being asked all over the world, is what is the use for it? Because one of the reasons why CBDCs have had some trouble just being adopted in certain countries is people don't understand, like, what's the point of this? Why do I use this? What do I use this for? Why does Brazil even need a CBDC?
Okay, I believe that it will allow the financial institutions in Brazil to launch new services with efficiency and accessibility to a broader population of Brazil. So we might have like instant settlements, cross-border payments, and asset tokenization that might bring the micro investments to a broader a range of people in Brazil.
But couldn't Brazilians
and that's a pilot. I think one of the main purpose of the pilot is to find those ways of what is the product that will fit the Brazilian market.
That makes sense. It's to sort of try it. But I guess the question one would ask is, the use case that you just described, couldn't stablecoins just serve the same purpose? I mean, my understanding is that stablecoins are already fairly popular in Brazil. What you just described, cross-border payments, things like that, I mean, stablecoins could be used for that.
Yeah, but it's not safe in a regulated environment. So I think the main piece is to work together with the Brazilian Central Bank to work for a regulated environment. And how can we build products in a regulated way so we can unleash the success of the crypto technologies in Brazil for the financial industry?
Give us a sense of the timeline, and also what kind of platform is it going to be built on, or how is this going to look like? What network will it be built on? Is it its own thing? What can you kind of just spell out how this is going to work for those of us who are not familiar with Brazil's plans here?
Okay, so the idea is to build the infrastructure based on distributed ledger technology using the Ethereum smart contracts in the following 3 to 4 months. So each participant will build a node, and we'll be working on the following months to integrate that. After that, we'll be on a validation phase that we will test new products and financial services.
So
like
what kind
investments,
of product?
digital assets, and so on. And if the validation phase is successful, we might be rolling out this in mid-2024. So that's the idea of rolling out and testing all the CDBC pilot.
Well, you say products, multiple. So, besides just a coin, like, is there anything else that would be involved in this?
Besides the coin, we also see digital assets tokenization, so that can unleash micro investments in investments that are only reached by the rich people in Brazil. So I think that's something that we work to test and validate if it's successful or not. One of the things is I guess we have the treasure bills in Brazil.
Yeah, I was going to ask
Sorry.
about treasury bills and bonds and government bonds. Would that be tied into CBDC in some fashion? Would is there some interconnectivity that people who own a CBDC or have in their possession hold it in a government in a yield bearing government account, if you will? And what would that mean for the banking sector?
Yes, that's one of the ideas. And I think that the idea for the banking sector and also the central bank is to create efficiency in the back office and the settlements of all those transactions. Today, it's too expensive, and we have like a lot of intermediaries to handle all of those assets. And we believe that going for the digitalization of these assets, we may find a lot of efficiency in the financial service in Brazil.
Are there any privacy concerns with the Brazilian CBDC? This is a big topic kind of all over the world, especially here in the United States. People are really worried about this idea of government knowing what you're spending. And is that a conversation that's happening in Brazil as well?
For certain, we will discuss that. I think that's an important piece of the pilot. But it's like a conflict with the regulation. Like if we want to regulate that technology, we will need to come into a midterm about the privacy. Central banks today, they play a central role in Brazil in the technology framework and all the products that the banks in Brazil release to the market. And I think that's something that we need to discuss and come up with a solution that will bring the best to the public and to the regulation.
Guilherme, thank you very much for joining us this morning all the way from Brazil.
Okay, thank you. Thanks for having me this morning.
That was Chief Technology Officer Guilherme Jimenez. That's it for First Mover. I'm Jen Sanasi. Thank you to my co-hosts Emily Parker and Lawrence Lewiton. First Mover returns tomorrow at 9 a.m. Eastern Time. In the meantime, you can catch the hash today at noon. You're watching CoinDesk TV.